Hello guys, and welcome to another webinar. How are you doing today? Is everyone doing all right? It's Friday, and I don't see many good mornings so far. Did everyone still sleeping today? What's going on? Larry said, good morning, Theo. Good morning, Larry. So, as usual, guys, this is this content, it's only for general information, and there is no intention to provide any financial advice or personal recommendation or any of this stuff you know pretty well. Okay. And here at Admirals, we do the fundamental analysis in the format of podcast. And also, if you haven't downloaded your mobile application, please make sure you do that. So let's start with the charts. Yesterday, we saw a very strong moves against the US dollar, the pound, the euro, the Aussie, the Kiwi, the Japanese yen, everything dumped the dollar. Mladen, thanks for joining us. Good morning, Mladen. Rudolph, good morning, my friends. So, Great British Pound against the US dollar, daily chart. We went beyond both resistance. A very obvious area, it's this point here, but there are also many other resistance like this one, then this one. Because it's on the weekly chart now, maybe it's not that obvious, but if we go to the daily chart, we will have a better understanding of this stuff. Oh, my live chat was disabled. Now I see your message. Maria, good morning, Maria. Nick said, good morning, everyone. Good morning, Nick. Raquel, thanks for joining us. Good morning, Raquel. Rumen said, good morning, everyone. How are you doing, Rumen? Thomas, good morning, Thomas. So today, are we selling from here? I don't think so, but really what can we do if you are trading counter trend trades? And that's not a problem at all to trade counter trend trade. It's just to know how to trade it, right? So ideally here, we would like to see some kind of divergences or bearish engulfing, something strong or shooting star to indicate that the market it wants to sell off on the lower time frames. Trading on the daily chart, though, I'm not looking for any reversals right now. I just need the price action set up. Euro US dollar, explosive move to the upside. We went far and beyond this area of resistance, and next area of resistance can be found up here. There are still good room for the price to move. This one is not valid anymore. I will be looking really to see some bearish engulfing, and I will try to get my chances. But if the price, by saying that if price moves beyond this area and come to retest this support, I will be looking to buy. Now, guys, let me teach you something in this occasion. So, because it's different when you see this after the move occur, and it's different to understand the anticipation. So market was making what it was making up to this point, and then it decided to move higher. We see that it's been 1, 2, 3, 4, 5, 6 days, because it's a daily chart, that the market is creating clear higher highs and clear higher lows. It shows strength in the market. So we will start anticipating some kind of retracement, not a reversal. Why? Because we are not at any resistance level now. So if sellers they're going to join forces, we don't expect them to join forces to reverse, because there are not limit orders sitting in random places. Most limit orders, they are sitting in obvious resistance level. Therefore, and the last 2 days also, we saw some nice impulse momentum candles here. We do expect to see, if price is going to move a little bit higher and start retracing back, to find support around few levels, either around the 50% fib retracement or the 61% fib retracement, or around an obvious resistance. Ideally, what we would like to see is the most recent high of the market, and it's this one here. That's an old one. That's the most obvious, but it's not the most recent. Guys, understand few things, because this is key fundamentals for your trading analysis, and that's where traders they get very emotional. They see a new move occur and they are still looking at the past. The most recent swing, it's this one here I just draw. That's the most obvious. So this swing here, this high, it's very close to the 61.8% fib retracement. So chances are the traders trading limit orders only from fib retracements, they gonna, once they see the reversal here, the first reversal candle, they're gonna start placing buy stop orders. And see this, if the price, let's say the price, it's gonna move from this point a little bit higher before it starts retracing. In this case, the 61.8%, it's ideally at the same place with the broken swing high. So traders who trade from this support, broken resistance, it can act as support. Traders who trade the 61.8% golden ratio of the Fibonacci. Traders who trade from moving averages, I assume here it's going to be somewhere the 50 period moving average, and here it's an upward trend line. All these traders, they have vast interest only to execute trades from these four confluences. But for us, the retail traders, that we are looking for something more than just a fib or just a trend line, we have an intersection of price confluence here. So it makes it a very sweet spot for price action to be printed, because all these traders, they're going to react differently. Maybe we're going to see bullish engulfing, maybe we're going to see false breakout, maybe we're going to see just hammers. We're going to see something that indicates the market is willing to push higher. Now, after this, if the market is going to manage to make a new high, we don't know that. Guys, I will encourage you, those who are going to watch this webinar later and those who are on this webinar now, that's the best lesson I gave you so far about trends. You must learn to think before the market developed. And how you're going to learn? You're going to follow the instructions I give you here, exactly the way I describe it so far. And trust me, you're going to have great understanding of trading. Okay, so with this way, we will learn to act on price behavior and not to react on impulse price move. So still bullish until we see the reversal price action, and we're going to try to find areas to buy it. If the price moves all the way here without any retracement, here it's a dangerous spot to look for trend reversals. And then we apply a different analysis. We apply some tools that they can possibly indicate trend reversal. Okay, but if we don't see the price moving all the way there and a retracement occur from a reversal price action, then most likely we will try to buy at the level of confluence. Is this clear, traders? I hope so. Next, Australian dollar, US dollar. Price broke outside of this congestion in 2 candles, reaches the most recent high or the recent resistance. And from this point here, we are expecting to see some kind of reaction. If the price will break higher, we will look for the retracement to buy. If the price it's gonna stay with an inside candle today, and ideally a very small inside candle like this one here, you see guys, strong impulse, strong impulse, strong impulse, a small inside candle at resistance, great opportunity to sell it. And again, we are trading probabilities. We don't know if this trade will end up in a winning trade. We don't know that. So today, if the market is going to stay as it is, on Monday, I will be looking for the bearish engulfing. But maybe on Monday, the market will explode higher. Who knows? Nobody knows, right? But if I see a new high on Monday, I will place a sell stop order below the today's candle low. That's talking for Monday, yeah. So I will be looking to enter with a bearish engulfing if that occurs. Next one, Kiwi. Also very strong move from the New Zealand dollar. We are at an obvious area of resistance, as you can see from the chart. The market this morning also gapped down at the open. You see the close was here and the open was there. So it gapped down by 45 pips. That's a big move, a big gap for the Kiwi, because it's not that that high tradable compared to the other majors, but it is what it is. What I see here, it's a strong resistance. If we're gonna see close above the resistance, we will be looking to trade it to the upside until the next resistance. But if not, I will see how to play this. For now, I don't have any bias. Market is at resistance, the move is over. Now, again, traders, they are beating up themselves and they say, why I didn't trade this move here? Because it was obvious for you traders after it occurs. It wasn't obvious at this point here that this move will occur. And we didn't know the price if it's going to break above the resistance. As retail traders, we are patient and we try to find the trades that they give high probability, so we can go for 3 to 1 ideally on a longer time frames and overall to be profitable. Traders, and I see that from the coaching, the problem with many traders, they want to be right instead of to make money. And I don't know why this behavior occurs in trading by so many people, thousands of people. They prefer to be right on a prediction rather than to make some money on their account. Even if you guys have an account of $200 or 1,000 or 200 pounds or whatever it's the amount, even something 5%, 10% profit, even something, it's a reward. It's money. It's good to aim in trading to make money out of out of your trades, because if you are trading only to fulfill your inner self, whatever you want to fulfill, your emotions, then at some point you're not gonna stay to learn. But if you are thinking, okay, I want to make money not from this trade, but overall, if I take 50 trades, and again I go for 3 to 1, and I take high probability trades based on how Theo teaches us to trade, even at the end of the 50 trades, not at the end of the month, forget at the end of the month, forget at the end of the week, forget at the end of the day. It's at the end of 50 trades, it's at the end of 20 trades, it's at the end of 100 trades, it's at the end of a sample of trades. If I will be profitable, regardless the amount I will be profitable, profit is profit. It's very, very good. Guys, if I was you, I will definitely write down today's days, 14th of July, and I will definitely go back to this webinar to rewatch it again. So next one, USD/JPY. We shorted from up here. Again, something I see traders, they battle a lot with their emotions. When they have winning trades and they close it some point here, and then they see the move occur all the way down, they are beating up themselves. Why I didn't make more on this trade? Why? It's just to fulfill emotions, this expression of behavior. Here we trade as retail traders, and we don't know the outcome of the trade because we don't move the market. The same trade I took here, we could take it there as well. It will end up being a losing trade. The same trade could be taken here and could end up being a losing trade as well. All right. Why? Because it's counter trend trades. We don't know when the market it's gonna resume its trend, and we just take our chances. But even when 2 trades they lose and 1 trade win, and it's go for 3 to 1, it covers and it makes profit. Okay, now if the market, if my target was down here and the market moved over and beyond, and it could have given 10%, plus 10% or plus 15%, that's okay. It's fine. I mean, we didn't know that. Okay. You need to have some sort of adaptability and acceptability and acceptance in the market. We trade something, we have rules, we do it. If the market moves like this, perfect, because it gave us the opportunity to take our profits here, no problem. Let's find the next opportunity. That's how you must see your trading. Question from Swing Trading. Theo, what do you think about funded trading firms? Is it good for traders or better trade with self-capital? Now, it's a little bit wide subject, this one, and I would like to one day touch it in a bit detail. But for me, trading funded accounts, first, before you get the funding account, or when you get the funding account, whatever, because you have to pay some money up front for the challenge, it's good to know everything about the rules of the account. Why? Because that's a trap at some point. If you are a day trader and you trade or if you're a swing trader, like you're swing trading, yeah, and you must stay in the move over the night. There are funding accounts at some of the people I coach, they told me that they have funding accounts. They said, we realized that we cannot stay in the move overnight. And another guy told me, I can stay in one funded account, he could stay in overnight, but in another funded account, he wouldn't be able to have positions, to hold positions during the weekend. But if the price just moves sideways until it's gonna explode and get a direction, then what should we do? So I will encourage you to really understand how it's gonna work, the funding account you're gonna choose, and if it match to your trading style, then you consider what you're going to do, if you're going to go for the challenge or not. Okay, but for sure, even with your own money or with somebody's else fund to trade respectively, it's absolutely fine. Absolutely fine. USD Canadian dollar, the price came all the way here, and I don't hide it from you that in this kind of market where it's clear, lower highs, lower lows came, bearish engulfing, we were looking for this catalyst for a long time, and it came after so many weeks. And when it appears, because of this support here and because of the length of the candles, we weren't able to participate. So that's again something you guys have to understand. If you're going to have the opportunity to take, let's say, 100 trades a year, just 100 trades, you're going to take way more, but even 100 trades a year, and in that year you win only 30 and you lose 70 and you go for 3-1, you're going to be up by risking only 1% of the account, you're going to be up 20%. If you are risking a bit more, 2%, it means you are almost 40% up. Give it or take some overnight fees or some swaps, some weekend fees and all this stuff. Maybe it's going to be a little bit more because this is usually a little bit higher number, but overall we are about 20 to 40%, depends on the risk per trade, which is not bad. And again, we see the moves occur. We expected for price to come to a level that we can trade it, but the catalyst is not there to take the trade, or the risk reward here. The catalyst was here, but the reward to risk wasn't favorable, and that's okay. We have to move to the next one. Euro JPY. Look at this, guys. Look at this. We drew our trend line. 1, 2, 3, 4, and price rejected 2 days ago. Yesterday, bullish engulfing, cap down to the upside, took the market, and now the market respected this trend line. I assume there is also either a 20 or a 50 period moving average here, exponential moving average, ideally, and there is a confluence between a trend line, upward trend line, and a moving average. So, and we see the price move higher. That's what you have to, I want you to start thinking in terms of, I trust my technical analysis, I trust my levels, I trust that the FIB level, it's an area that traders work, but don't get confused by trusting your analysis and by trusting what we do here. It means necessarily every trade is going to be a winner. Okay, and I will say that again and again and again, because you have to rewire your brain to think as a professional trader thinks, in terms of sample size, in terms of I make based on a sample size my profit, not based on a week and on a month. All this crap, excuse me for the word, I see on the internet from people that maybe they don't even trade, or they trade for 1 month or 2 years or 3 years, and they think they go out to, it's nothing wrong to go out and say things, absolutely, it's fine, but at some point you have to start pay attention to who do you pay attention to. you have to know who can give you the reliable source of knowledge. And I'm pretty sure that you are in the right place, guys. Okay. So enough saying about this today. Let's check the DAX. DAX 40 daily chart, nice break to the upside. Here it's the next area of resistance. 4-hour chart didn't really move, and that's awesome. When the 4-hour chart doesn't move, it means some buying opportunities may arise. Let's go to the 5-minute chart. We have this. And we have this one here. Ideally, I will go for a buy stop above this area. Let's check the 1-minute chart. A couple of minutes before the London Open, I will see where the price will stop in the next 1 minute, and then I will place a sell stop order. I will show you where I will place it. Isn't this the DAX? Yes, that's the correct one. I remember the other day I was showing you the Dow Jones, and I opened a trade on the Dow Jones, and I thought it was the DAX. So let's wait 1 more minute and see how this candle will develop. So guys, please pay attention to what we said so far. We measure our performance and our profits based on the sample of sizes, and not based on the week, because maybe this week, for example, myself this week, I had I think it was 3 losing trades. Did I had a winner this week? It was the Aussie, it was the pound, sorry, the USD JPY, and which one was the other? I think the euro. Was it the euro or the CAP JPY? Both short. But I don't remember, was it last week or Monday they played out? Anyway, but then I had 3 losing trades or 4 losing trades in a row. That's okay. So if I measure my performance on a weekly basis, I have to quit trading, right? But no, I measure it based on a sample size. I have the 100 for me, it works the 100. Now I start with 20, then I raise it to 30, so on and so forth. So that's how I measure it. Guys, 1 minute before the London Open, and it opened here. I didn't go into I'm not going to go into any short position, simply because here it's a strong support, and I don't want to try and go on the breakout of the support. If you want to trade short, this is an ideal point in my opinion, below here, but I prefer, if the price is going to break to the upside, to get filled to the long side. So I have only a buy stop order, and it's above here. I'm not going for a sell stop order. It's very it's not technical right in terms of technical analysis to place a sell stop right on support where everyone is buying to go and sell. Price, of course, breaks the supports and moves beyond, but yeah, as retail trader, I prefer to just stick with what we learn in technical analysis, because it really works. I wouldn't be here if it wasn't working. Because if you are a Forex trader and you trade based on fundamental analysis and you are using leverage, good luck. Fundamental analysis, we use it for investing, ideally, not for trading. Or scalpers, what fundamental analysis to do on scalping? yeah, the CPI numbers came this and that. So, but if we are scalping for 5 minutes the market, how does it help us? Maybe we're going to find a good opportunity on the opposite side rather than the direction with the fundamental analysis happen. I don't see many questions here, maybe because it's Friday. Anyway, let's see how this is going to develop. Let's check the gold. Sorry, guys, I just flipped between the bar charts and the candles. Gold, we're going to look this area here on the weekly chart. That's the next area of resistance, and the next area of support is down there. We'll be looking these two now because that's the most relevant. And yeah, we take the high here. Yeah, it looks like it took the high. Sell stop order. Here is the thing with trading on the opposite direction of a strong trend development. If the price doesn't hit a resistance, chances are that it's going to go to hit the resistance. So here it's the resistance, the most recent resistance and obvious. Here it started. If traders are placing sell limit orders, they will have placed them as high as possible to have better reward to risk. So why to place them right here and right there? That's why I would like to place the bearish engulfing setup as a pending order once the price is at the level of resistance, and the bullish engulfing once the price is at the level of support, not just randomly in the middle of a trend development. Okay, keep in mind that. Back to the DAX. Market is not doing anything. Let's see how the 5-minute candle will close. That's the 1-minute chart though. Let's see if it's going to close bearish, bullish, dodgy. It closed a bit bearish. Sorry, no, it closes an inside candle. So we can see a breakout either to the upside or to the downside. But really, London Open, bearish engulfing, support, inside candle. So we'll see what's going to happen. If in the next, guys, I will wrap up for today. If in the next couple of candles, 2 candles, the price doesn't create a high and take the pending order, I will cancel the order. Okay, so keep an eye on that. We need 5 this current candle and the next one to show us if we're going to stay, if we're going to keep this pending order valid. So in the meantime, I would like to wish to everyone to have a fantastic weekend ahead. Enjoy, take some rest and enjoy your weekend. And I will be looking forward to see you on Monday at the same time. Thank you so much. Bye, everyone.